This is a Look Forward interview from S&P Global. My name is Nathan Hunt. I'm joined today by Alex Birry, Chief Analytical Officer for Financial Institutions at S&P Global Ratings. We're going to be discussing an article that Alex co-authored for our recent Look Forward report entitled Toward a Tokenized Future. Alex, thank you for joining me.
Thanks for the invitation, Nathan.
Alex, I had a chance to talk to your co-author, Chuck Mounts, about this article the other day. He said that counterintuitively, now is the time to think about tokenization. Given everything that's happening in crypto markets, would you agree that this is an appropriate time to think about these issues?
Absolutely, I totally agree with these statements. It's we identify tokenization as one of these trends that will likely shape the markets of the future. And by tokenization, if we need to define that, that's really the conversion into a digital representation of any asset or right on the blockchain. And this digital token can be owned, used, and exchanged on the blockchain, therefore reducing the need for third-party intermediaries. And it's true in terms of timing, you're probably all very aware of the FTX demise and the collapse of some DeFi protocols. But these tended to deal with cryptocurrencies, which in our view are really just a minor, though much publicized part of the potential tokenized universe. So I think the current environment we see is an environment where a lot is happening behind the scene to really enable the development of tokenization, including to real-world assets.
Let's talk about the mechanism of tokenization, because I think this is challenging or confusing for a lot of people. Let's say there's a private equity fund I want to invest in, but I don't have enough money to invest in a private equity fund. I don't, by the way, have enough money to invest in a private equity fund. How could I invest through tokenization?
Yeah, one of the attraction of tokenization is the fact that it promotes greater accessibility potentially. And one element is that tokenization allows for fractionalization, a bit of a jargon, but basically that's a process whereby as an investor, you could buy a smaller share of what's typically a larger ticket item, such as an investment in private equity. Or there are some parallels in the art world. Sometimes people are saying you could buy a fraction of a Picasso painting thanks to fractionalization. So I think that's this process of being able with a token to buy a fraction of the underlying assets is probably opening new doors. Although I think I would also say that there are other considerations which mean that fractionalization may not be the revolution that it's sometimes portrayed to be, especially with consumer protection and other considerations in mind.
Fractionalization actually feels like something that has been done in the past, going back to the East India Company, right? That was the selling of shares. It was fractionalization in either a trading voyage or in an underlying company. How is tokenization different where fractionalization is concerned?
Yeah, one big element here is the underlying technology, which is immutable with the blockchain underneath. It's an immutable representation and therefore avoids any tampering. So I think that adds a really strong element of security and obviously as well some efficiencies. If you want to trade the assets, then the trading of the assets can be much more automated and you reduce you rely much less on third parties. That said, I think one thing that has to be considered and one reason why it's not an overnight revolution, and you can see that because Bitcoin's been in place for 15 years, and this revolution hasn't happened yet. It's just really at the early stages. But one consideration is that you do still need some intermediaries that you trust, especially some trusted custodians that will really bridge the gap between the real world, if I can use this expression, and the tokenized world. I.e., you want to make sure you have an agent, for lack of a better word, that guarantees the permanence and the veracity of this link between the underlying assets and its token.
My brother-in-law runs a fund that invests in battery metals. What we're dealing with here is a physical market for some pretty obscure metals that actually need to be held in warehouses. Would tokenization be a potential development of that market in the future?
Yeah, I think you touched on another potential attraction of tokenization. I think we briefly touched on the efficiency aspect, the accessibility with fractionalization. Another key attraction is the fact that you could potentially know who the previous owners of the token were, and therefore that could add a lot of transparency, especially in context of supply chain management. And I think those precious metals, for instance, or battery, etc., could be really seen in the context of supply chain management. And therefore, in this case, it's really the transparency attribute, transparency attraction of tokenization that's at play.
Your area of expertise is with financial institutions. Do you see a role for commercial or investment banks in this future tokenized economy?
I certainly see one, and it's already happening. In the FI team within the ratings business, and what we already see, for instance, is tokenized bonds, i.e., banks helping issuers arrange bonds, traditional bonds, which still have an issuer, a term, a maturity, an interest rate, a ranking, but using the blockchain technology underneath on the back end. And that's already happening. Those bonds are still they're almost a bit hybrid in that they're not fully digital or not fully tokenized, but we can see with each iteration of those bonds that the technology is moving a little bit forward. And it's true that it can help basically, again, with the efficiency, especially if you think of all the post-trade steps that are required with a bond, thinking of the clearing and settlement, and that can really be accelerated and the cost of it can be reduced. But as I said, there's still a need for intermediaries. If you think of the exchanges that the cornerstone of any bond, for instance, they still have a role to play. Some of them are investing in this new technology to be able to offer a blockchain solution, but there's still a need for this regulated infrastructure that helps deal with AML or Know Your Customer, all these regulations that are also a cornerstone of the bond market.
Accessibility, which we've talked about a lot, sounds like a good thing on its surface. I would like to have access to private equity funds, for example. But a lot of these instruments are actually fairly complex, and I may not have the education, the sophistication to be an effective investor in private markets. Are you at all concerned that tokenization could lead an unsophisticated investor to get in over their head in a market they really didn't understand?
Absolutely. You're totally right here. And I think there are two reasons why, as I said, it's not an overnight revolution. One is technology, and we can talk more about that if you want later, but there's also regulations. And as you touched on, fractionalization might not be suitable for all asset classes, for all types of investors. And if we think of the role or the evolution that we'll see around regulations, regulators will still have at heart to think about financial stability considerations, about market conduct, but also about customer protection. And in this case, absolutely, if there's a fractionalization of a particular investment, they will want to make sure that this asset class is suitable for you as a retail investor, but also even that the process and that's the due diligence, that the transparency around the risks are fully transparent to you. And as well, there will still be a need for third parties explaining all that to potential investors, because I don't know what's the level of your coding capacity, but I can't read a smart contract, and you will probably, like me, need potentially a third party that asserts, for instance, that the smart contract is doing what it says on the tin, basically.
Let's talk about technology, because tokenization obviously depended on the blockchain or blockchains. One of the criticisms I have read about cryptocurrencies in particular is that the blockchain is, as currently constituted, is not capable of transmitting the number of transactions at the speed that are required for most financial organizations. Can tokenization function with blockchain technology being where it is right now?
In the current state, probably not at scale. You can have lots of pilots that will function very well, but if you consider potentially trillions of dollars of assets being exchanged on the blockchain, at the moment, it wouldn't cope. Absolutely, whether it's Bitcoin, Ethereum, they would be struggling to necessarily deal with the volume of transactions we see potentially being transacted on the blockchain. And but that said, we are seeing progress, and during this period where activity levels are lower because of FTX and other crises in the market, we have seen real improvements happening. One example is the merge of the Ethereum blockchain, whereby the consensus mechanism of the blockchain has changed from a proof of work to a proof of stake. And that's overnight basically reduced the energy consumption of Ethereum by 99% or more than 99%. So we are seeing, and there are other enhancements around layer 2s, and I don't want to get too technical, but there are enhancements that are happening at moments that could really, really unlock the processing capability of different blockchain technologies. In some cases, those progress or those improvements will be at the expense a little bit of the level of decentralization of the overall solution, but there are a lot of options being considered at the moment.
Speaking of decentralization, given the complexity of these instruments, given the complexity of confirming for physical markets, the existence of the underlying asset, what role do you see intermediaries playing in a tokenized future?
I think that's a fascinating aspect of this topic, is that, as I said, yes, decentralization and tokenization are very often associated, but it will not necessarily displace all intermediaries. Or what we'll see is that the role of certain intermediaries will disappear. Some new intermediaries will appear, but also the role of existing ones will change, will morph. And that will be a fascinating element to analyze in the next decade. And we see already incumbents or existing financial institutions really investing a lot in that, so that they disrupt themselves rather than being completely put out of the equation.
What about regulation? This is obviously an area of some sensitivity. I know Gary Gensler at the SEC is looking very closely at regulation of crypto. Do you feel like regulators have a role to play in creating that level playing field within a tokenized future?
Absolutely. And the regulators and legislators are not standing idly by. We can really see a lot of activity happening in the current environment. It's even beyond regulations. If you look even at the more basic level of the legal system, for instance, can you foreclose on an asset that's owned via a digital token? It's not this question is not answered in all jurisdictions, and that's quite a basic aspect. But yes, on top of that, regulators are looking at financial stability considerations, consumer protection, and also market conduct, because all these rules will continue to apply. The laws of finance continue to apply even in the digital world. And what we see very often is some regulators trying to map almost the different types of tokens to existing regulations to see whether, for instance, a token is a security, and therefore could the securities legislations or regulations apply to this one? Or simply is this token so novel that actually new regulations are required? So there's a lot of thinking happening at the moment on that. And I think in the next couple of years, we're going to see a tremendous amount of progress on this.
Alex, thank you so much for joining me.
Thanks for having me, Nathan.
To read Alex's article on tokenization or the other articles in our Look Forward report, please look at the show notes. Thank you.